I hope that you're doing well. So we have here, well, before I introduce anyone, welcome to the live on insurance. I'm so glad to have you. And so our guest, we have Asher Jones-Clarke, and then again our co-host, my co-host Darren. So before we get into the questions and everything, I am going to allow Darren to introduce our guest for today.
Yes, please. So join us is Asher Jones-Clarke. He's a licensed insurance advisor at Sagicor. He's passionate about helping people with financial decisions through his educational content and practical advice. He works with insurance and financial planning to make it easier and more empowering to individuals and families to better protect their to better protect what matters most. We're excited for him to help us with answering questions and giving his insights.
Hmm. Okay. All right. So perfect. All right. So,
Pleasure to be here. Thank you again.
uh-huh. Yay. Oh, wait, hold on. Before we. Da, 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 da.
I like it. I like it.
Okay. All right. So yes. All right. So as you guys are accustomed from the last time live, it was on um HR and everything. And so as we're accustomed, we're gonna go. I'll go into a list of questions and that we're going to ask Asher. So I know Asher and that you've been in insurance for over 5 years now. So what made you choose insurance as a field, and why not other um, a financial like sectors such as banking and finance, corporate a finance and consulting, or even like the public sector, or what specifically led you to um, insurance?
Cool. Um, that's a really good question. I don't think people wake up and say, "Well, hey, I want to be insurance advisor." I think that really chooses you.
Mm.
So I was in compliance before I started working as an insurance advisor, and I guess my interaction with people, someone would have reached out to me and said, you really fit the job, and insurance is a career that you have to have a love for people. So it's not really that I chose insurance, but I guess insurance chose me.
Mm.
I think that's best as I can say it.
Oh, okay. Okay, that's interesting. And so you said you were in a what before
Compliance.
insurance? Oh, compliance.
Compliance.
Okay. And for those of us who don't know what compliance is, can you give us like a rundown of what that is?
Okay, so compliance basically looking at um, AML, anti-money laundering.
Oh, okay.
So making sure that all the forms are done correctly. People who say they are.
Mhm.
Um, Making sure all the guidelines are according to the law. So
Okay.
it kind of leads into that legal side somewhat. Yeah.
Oh,
So
okay.
it's the pivotal part of any company or any organization right now. Yeah, very heavy now.
Oh, okay. Okay, understood. And another question. Was this a complaint to like banking, or was this like another or what sector was it kind of like in? Just to give us
Yeah,
some.
banking.
Oh, okay, okay, banking. Okay, understood. Okay. All right. Just wanted to mm, yeah, to make that clear. Okay. All right. So you have been teaching financial literacy with the Ministry of Youth since 2022. What influenced you to teach a financial literacy?
Okay. So say 2022, I think probably a little bit before that, but it was during COVID, and I guess someone actually reached out to me. Um, been working with youth before,
Mhm.
So they reached out to me, and me having a love for young people,
Mhm.
I guess they just asked me to start to prepare some form of financial literacy for them. I guess what really influenced me is because I did not have anyone when I was younger to teach me how to manage my money. Um,
Mhm.
Not to say that persons were not out there, but I guess the
Mhm.
format and the platform. So I
Mhm.
guess for me, I wanted to, I guess, be that person that I never had, especially
Mhm.
for the youth now. And so I think that was what really influenced me to, I guess, to be a change and to bring
Mhm.
I guess, a flair of Asher to it along the way.
Okay. Mhm. Oh, okay, that's good. I like that. A flair of Asher. Okay, all right. So now we're going to have a little bit of a game. Before we had called it a true or false, but we're just going to call it agree or disagree on these particular quotes that I would have pulled together. And Asher, you can always apply them to insurance, but also to investments as well. So the first quote is this: the cost of financial freedom gets more expensive the longer you wait to start investing. Do you agree or do you disagree?
Repeat one more time for me.
Okay, sure. The cost of financial freedom
Mm.
gets more expensive the longer you wait to start investing.
I love agree and disagree questions, you know.
Okay.
I agree. I agree. As it relates to investing, it
Mhm.
does get more expensive, but
Mhm.
it's important to understand too that financial freedom, I think you said financial freedom, that looks
Yeah.
different for everybody,
Yeah, I agree.
right? Yeah, that looks different
Mhm.
for everybody. Because it is different for everybody, expensive is relative, right? It's very
Mhm.
relative as it pertains to investing because somebody that may be a miser or conservative, it may not be
Mhm.
expensive for him because he may not see financial freedom as someone else that may want to own a particular something or not to pay
Mhm.
bills or so is a really different as it pertains to financial freedom. But as it relates to insurance, though, I would say the earlier the better when it comes to insurance, right?
Mhm.
I would make a point here: insurance is not bought with money first. You don't buy insurance with
Mhm.
money first. You buy insurance with good health. You buy insurance with good health first. Yes.
That is
So
true.
get it when you're early and get it when you're in good health.
Uh-huh. It's true. I'm not sure where exactly like I've heard this, but that quite a long ago, and that insurance only works when you're healthy.
Mm, mm. I guess I would mention later down if it does come up on
Mhm.
the dynamic of insurance now is changing where there are policies where you can get insurance if you do have a pre-existing condition. So
Okay.
yeah, they are making it's changing, right? It's a
Okay.
changing
All
a real dynamic. Yeah, but
right.
as
Okay.
it
All
relates
right.
to this, yes,
Okay.
the earlier the better.
Okay, cool. Okay, so I want to talk about that now because we may not get to it in the future, or we may like forget as
Yeah,
the
that's right.
conversation kind of like goes on. Let's talk about that now. So tell us,
Mhm.
what pre-existing conditions like what would you need?
So it could be. It really depends on the policy, but if I could think of one specifically, any pre-existing condition, to be quite honest. How it really works is for a traditional policy, a person may have to go under underwriting because as the insurance you look at risk, right? So if
Yeah.
you are in quote bad health or not as healthy as the other person, we will obviously see it as a bigger risk. But if there's
Mm,
no underwriting requirements, it means that you can get the insurance, but it may not be the same type of policy. It may have different features. Okay,
mm,
so whether you have maybe a heart condition, maybe diabetes, maybe overweight in terms of BMI, it could be cancer, right?
Okay.
The point is that there is insurance out there for everyone, but it may not
Mm.
necessarily be the same as a traditional insurance policy. They may have certain different features to it, but it is
Okay.
available.
Okay, understood.
Mhm.
And as you were kind of like speaking, a thought just came into mind. Do you need to have like a medical checkup with your GP before you I can like get health insurance?
Okay, so that's a good question. It will be prudent of you to make sure that you're always in good health. So every year get a checkup, not just for insurance, but the
Okay.
insurance company is going to they're going to do their own tests because
Okay.
y- your GP, and even though by law state is supposed to put down what's correct, but the insurance company is going to go with who they trust. So we have persons on our panel, our
Okay.
own doctors who we will send you towards, and we will go from there. Because your doctor could put anything down,
Mm,
right? And that's not to say that doctors are dishonest or anything, but it's for the insurance to not be exploited.
okay.
Yes, so this is a safeguard.
Okay. Understood.
Mhm.
Okay, thank you for that. All right. So the next quote is going to be: Your
Mhm.
well being is like a retirement account. The sooner you invest, the greater your returns will be. And this is just a kind of like a following on from the first
Mhm.
quote. But
Yeah. Mhm.
mhm. Yeah, so
So the sooner you invest, the greater your returns. That's what you said.
yes, yeah, I will be.
Okay. So for someone who is, I guess we would get to that point, who is actively in their master's program in investment,
Hmm.
I strongly disagree.
Okay. Okay,
Strongly
interesting.
disagree. Yeah, interesting. Yeah, so hypothetically, you should have greater returns in the perfect world, but
Mm,
sooner investment does not necessarily equate to greater returns.
mm,
Okay, so like an example, I could invest in company X sooner, but company X may be not a good company. So it means that
yeah.
sooner does not necessarily mean that greater returns. What I would
Mm,
advise though is the fundamentals.
mm.
We're investing on information. So
Yeah.
invest really from a position of information rather than timing.
Hmm.
Yeah, that would be my, without going too far or too in depth. Whether it be passive investing or active, because people think by passive investing that you don't have to do any research or anything. That's
No.
not
Yeah.
true. You
Yeah.
still have to know your company. You still have to know what the managers of the portfolio are doing. So
Hmm.
it's always important to invest on information rather than timing, right?
Hmm. Hmm.
Yeah, so I disagree with that. But it was close though. The average person may think so, but it does not constitute or stop a person from saying, well, I'm going to start early.
Hmm.
Mhm,
Yeah.
mhm,
Yeah, that's true. That is true. But I guess okay. So my
mhm,
point to add to what like you were saying, sometimes I think um and that earlier is better
mhm,
because let's I'll put some context to like of what I mean here. Um and so again, I guess it all depends on like how old you are, whatnot, how much money you're making. But for
mhm,
example, say that you have like a 20 something year old.
mhm,
They're stronger, they're younger, and so then they would be able to put in like a lot more effort.
mhm,
And they also like have a lot of well, they have more free time on their hands. and then like an older person would, who may have like a lot more responsibilities.
Mm,
So from that perspective, I'm thinking, okay, yes, the sooner the better. However, on the flip side, when you are older and you have like built up that cash and whatnot, you can like always like hire someone, a professional company to honestly like invest on your behalf, and like stockbrokers and everything like that, who can still like do the research and whatnot for you. But of
mhm,
course, it's like, yeah, you're still going to have to figure out in the initial beginning of which company is good and which company is not. Because if you don't do your due diligence, as you said, of figuring out all the information, you can give
mhm,
your money to the wrong company and lose it all. So yeah, so I'm just also like looking at it from those two perspectives as well.
mhm. I think what you're referring to was the risk tolerance of the age
Mm,
gap. Because
yeah.
if you're younger, you can take more risks because you have time to recover it down the road.
Yes.
But if you're older, then especially if you're going into retirement or near the stage of passing away, then you have less time to create that wealth. So I
Yeah.
do understand it from a risk tolerance point of view of starting earlier,
Mhm,
have time to recover. Yeah.
mhm,
But in terms of returns, is it should not be the focal point
mhm.
of
That's
so
true.
yeah.
Yeah. Okay.
Mhm,
All right. So the third quote is going to be about a very popular author.
mhm,
His name is Stephen R. Covey.
mhm,
As some of y'all, or most of y'all, may know his book, The 7 Habits of Highly Effective People. And this
mm,
is one of his quotes here. The
okay.
most important financial asset is your own capacity to learn. And I'll read that again. Our most
Mhm,
important financial asset is our capacity to learn.
okay. That's
All right.
interesting.
Mm-hmm.
The last word is what has me.
Mm,
When I was at BCC, I had an HR professional, and I cannot forget what she told me.
mhm.
She told me that learning is not about knowledge.
Oh, okay.
Learning is a change in behavior. And I would never forget that. So when
That's
people say
profound.
when I learn, I want to see a change in behavior. So to me, I agree.
Mm,
So it really says that the most important financial asset is really your mindset, your response, and your experiences as it pertains to learning and changing your behavior. So
mm,
I would agree from that perspective of learning being a change in behavior and
mhm,
being a financial asset. Yes, because of our a lot of our building of our portfolio is really based on our experiences,
mhm,
mindset, responses, emotions, all that there compiles into
mhm,
whether it be insurance, investing, financial planning. Um, Behavior has a lot to do with it.
mm. That's true. That's true. Oh wow. So hopefully the recording also kind of like has this, Darren, at a later date we can get that specific that a specific clip and post it. Yeah, so I love that, honestly. Oh wait, let me mark this specific point. Right. So that we can always go back to it a little later. All right. So the next quote is going to be this one. Mismanagement is the thief of wealth creation. Mismanagement is the thief of wealth creation.
Okay. Um, yes, I somewhat agree.
Okay.
Somewhat,
Hmm.
somewhat agree. I think from my perspective,
Hmm.
mismanagement is the thief of not wealth creation, but more wealth preservation.
Okay.
Ignorance is the thief of wealth creation.
Okay.
Yeah,
Mm,
ignorance, not ignorance in the sense that you don't know or you're not exposed or the awareness. That is the thief of wealth creation. But when you know, get it now, is you know the mismanagement of it. That's the thief of the preservation of it.
okay. Okay.
Yeah.
Mm.
So
You
it's
are
somewhat
spitting out so much
underrated.
wisdom and nuggets. I'm like, but yeah, that's what you just said. So thanks for that, honestly. Um, so yeah, and then the next one is going to be by Miles Monroe.
The
Um,
great moves.
he's yep, yeah. So he said plans, and I put in
Mhm.
quotes, kind of like budget, are what bring dreams to life. So plans are what bring dreams to life.
Mm. Um, I somewhat agree.
Okay.
Plans are good. Does it bring things to life? In my
Yeah.
experience, not really. There's much more to just planning. It's all well and good to
Oh
put
yeah,
things
of
on piece
course.
of paper. You
Mm-hmm.
know, I guess we get where he's coming from,
Mm-hmm.
but on the other side, there's so much more into planning. So the quote is lacking a little bit more
Mm,
meat. Yeah, 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 yeah. Because for me to say that very general, and then for
mm-hmm.
people to walk away with it means that I have not really, you know, gone into what planning really is. It's very
Mm-hmm.
general. So I somewhat agree.
Okay.
But for it to bring to life,
Mm-hmm.
mm, it's a start. It's an important
Yeah.
start. I would say that.
Yes. Yeah. Yeah. Probably is because it's like or once you like make those plans and you obviously like have to actually like execute it to bring it to life, and the
Execute it. Yeah.
execution is going to be the most important like part after the planning, just
Correct.
so that because it's like you could always like forget your plans, and so like sometimes it's always good to just simply write it down when you
Write
have them,
it down.
so
Yeah.
that in the future you can always like revisit it each and every time to remember, even though a life gets hard and life be life, and that there's still dreams and hopes that you have, and it is
Mm-hmm.
possible
Mm-hmm.
as you kind of like go along. So
I want to
definitely.
ask
Mm-hmm.
one question. This might be a slight tangent, but I'm
Mhm.
hearing a lot of I guess focus on doing, because even like when we're talking about like knowledge and that kind of stuff and how it's actually really doing, that's the nugget there. What advice or words of wisdom you would have for someone trying to maximize on the doing, especially in this world where we have like AI and stuff, where even knowledge seems to almost be becoming commodified.
Hmm. Okay. So when you say doing, explain what you mean by the doing in terms of investing, in terms of financial planning. What do you mean?
Well, since we're on financial plan, I'll keep it there. But I do
Mm-hmm.
really just mean in general. I feel like um the journey of 1,000 miles starts with a single step is a good like a starter. But
Mm-hmm.
I feel like there is something more that you really need to focus on, even if it's just purely financial. Like,
Yeah.
yeah.
All right. I think I can answer that for you. You have to move from a position of doing to becoming. Don't do carpentry.
Yeah.
Become a carpenter. You understand what I mean?
Mhm.
So don't do finances because it's just general. Be, become the financial planner.
Hmm.
So in the becoming now is more purposeful.
Hmm.
If you understand what I mean.
Yeah.
So that pertains to anything. Don't just do it. But your doing is the start.
Hmm.
But then through that doing, become what you're doing, and that way solidifies the purpose of it, and it makes it more impactful.
Hmm.
So I hope you understand what I mean.
Mm,
yeah.
Okay,
And I guess
very
that would
good.
speak to like the different habits you would form around the actual actions to like being around people who are also looking to become and that kind of stuff. Like seek
Correct.
like minded individuals and things. Right.
mhm,
Correct. Correct. Okay.
mm,
Perfect.
mm. I have a follow-up question.
Oh, a follow
How
up.
do you yeah. So how do you like make that transition from doing to being? Because it's like I feel as if it's like a majority of us get so kind of like caught up in the doing,
Mhm.
and that we don't even like, and that our brains are so far from becoming, or it's not even a thought until someone has like brought it up. So how do we in and of ourselves kind of like make that transition or be intentional to do it?
Okay, so she's on. There's some questions coming in here. Yeah. um, I think it would go back to say that to get to your becoming, you really have to have a purpose behind it. Going back to the same quote when Mel said, "The plan is good, but if the plan doesn't have a purpose behind it, then you're gonna always fall short." So the doing is very important because it starts the process, but in there it has to kind of give birth and light to the purpose at the end, if you understand what I mean.
Mhm.
So if they get to your becoming, it really has to be fueled by a purpose, right?
Okay. All right. Okay. Okay. Understood. All right. So thank you for that.
Mm-hmm.
Um. mhm. All right. So the sixth one
Mm-hmm.
um is by Tony Robbins. He is a motivational speaker in America. So he said, money does not change people; it just amplifies who they already are. So I'll really read that again. Money does not change people; it just amplifies who they already are.
There's a tough one. There's a tough one. Um, it sounds good.
Mm,
I want nobody attack me for this. But it sounds good, yes. But in my
mm,
opinion, it isn't entirely true.
okay.
So I disagree, and I tell you why. People can change.
Okay, yeah, that's true.
The point in the matter is people can change. I cannot sit here and say that you are who you are for the rest of your life. People can change, whether you got money or whether not. What money does though, it reflects the condition of your heart.
Hmm.
In my opinion, money reflects the condition of your heart. So whether today you heart on something specific, and then the next 2 weeks it might be something else, money will reflect that. So whether you have or you don't have, it reflects the condition of your heart. But I would not sit here and say that money really changes you or does not change you. It doesn't amplify who you are because who you are is constantly changing. Okay, so I think
Hmm.
that's how I would answer it.
Okay,
I
understood.
think
I
people
like that.
deserve that grace and that liberty, whether you change for good or change for bad.
Mm, okay, true, true. All right. So the one, um, yeah, is this: the only time that you can choose your family is
Hmm.
through marriage. So choose wisely. I'll read it again. The only time that you can choose your family is through marriage. So choose wisely.
Mm, I disagree.
Okay.
Yeah, because I think like isn't isn't friendship a choice of family through the adoption?
Yeah.
Is it not? Yeah. So I feel like and that's without the legal ties.
Mhm.
So
Yeah, and also
I
could
guess
be
the same way how friendship could be a choice of family through adoption without the legal ties, then I don't think um, has anything to do with marriage in terms of choosing your family.
mm,
Yeah.
okay.
Even bring it back to, because we said to bring it back to like insurance or investing.
Yeah.
I've seen more persons now, um, as it pertains to their beneficiary form in terms of the
Mhm.
insurance.
Mhm.
I've seen persons now putting on friends rather
Oh,
than blood family. They will put on
okay. Oh,
friends
wow.
first.
Okay. Oh, wow.
Yeah, so
That's interesting.
it really opened my mind to the idea of family could be really anything.
It's true.
Mhm.
It's true. And and in the Bible it says like a friend sticketh closer than a brother. So that kind of like
Mm,
shows you sometimes how friends can like become closer than your family and whatnot. So
mm,
yeah, that's good. And then our last quote. And for any of you that are on, you can also ask questions in the chat. Feel free to do
mhm.
so. We can see them. Yeah, so just letting you know that before we move on. Yeah, but the last quote is going to be from someone I met
Mhm,
a little over a year, a colleague, past colleague.
mhm.
And she said, most of our pain is self inflicted because we refuse to ask for help. Most of our pain is self inflicted because we refuse to ask for help.
I agree. And
Mm.
this is coming from the profession and career of a strategic or financial advisor. We and I've been out there enough. This for let's say nearly 6 years now, or probably 6 years. Um, we become very prideful as a society, you know, and finances are a very touchy topic, you know,
Yeah.
um, and so it's almost struggling. They would rather take 6 years to figure out themselves than to take 2 seconds to come and say, "Hey, I need help." So we've become a very individualistic society, and if persons only knew that the family is one of the biggest wealth creations I am aware of. If you check
Mm.
any wealthy family, family is it they conversate. Okay, so this individualistic society that we're growing up in is not going to it's not going to survive in terms of good financial planning, in my opinion. So a lot of self-inflicted really is a prideful stance that I know we've gotten it from, but yeah. So she's right. Your friend is correct. She's giving you good wisdom.
Okay, that's good. And this is just an observation, but this is the first one, and that you have, sorry, the first quote, and that you have completely like agreed to. All the rest is like, half, half, But this
Mm,
one is the first one that you have completely kind of like said, I agree to. So that's good to hear.
at least one.
Right. Yeah. Okay, all right. So Darren, any other questions before we go into the segment on insurance?
None that come to mind right now.
Okay. Cool. All right. Um okay, got you. Got you. Okay. All right. So what is insurance?
Good question. Um, when people hear the word insurance, for some reason people get scared. I don't know why. But at its core, insurance really deals with risk. Okay, is finding a solution or bringing a solution solution to a financial risk. So when you hear insurance, you have to ask yourself a pivotal question: what if? Just two words: what if? What if something happens? Do I have something in my portfolio to secure me, to make me not fall on the ground, a safety net? So it's really looking at a solution for the uncertainty of life. If something happens, what if? Do I have something to help replace me, or a particular event happening that causes me a large financial loss? What do I have to provide a solution to replace that, or to put me back in good standing? That's really what insurance is. So when you
Okay.
bring that perspective to persons, no, then it no luck saying like, it no makes you think, as opposed to hearing it from your parents and your grandparents say, oh, insurance is this, insurance is that,
Mm-hmm.
then it becomes a new thought, no, in your mind.
Mm-hmm. Okay. That's good. Okay. Yeah. So, in other words, like it's a peace of mind. So that again, like if you were to like lose your job, that you can't like work anymore, and that you can have like something um like that on the side, which is good. Okay. All right. So the next follow up question would be kind of like on NIS and whatnot. So the National Insurance Scheme. So what is NIS and what is its intended purpose?
Okay. Um, so the NAS, well, what was um, their slogan again? Um, More than a contribution, it's a lifeline or something like that. I think so. So basically, insurance is looking at a social or governmental security to
Mm-hmm.
protect workers from the uncertainty of life events. Okay,
Okay.
so life events like unemployment, income loss, sickness,
Mm-hmm.
disability, and I guess the biggest one would be pensions. Okay, so it's looking at the replacement of income if these events were to happen.
Mm-hmm.
Okay, so
Okay.
that's basically what the NAS is. The government saying, hey, we're going to put something in place so that persons who are working within our society and our country,
Mm-hmm.
that at the very basic living standards, if a life event were to happen, they have something to fall back on, and it is contributory.
Mm-hmm.
Okay, so it means you gotta contribute to it to them for it to work for
So
you.
yeah. Mm-hmm. Okay. Understood. Mhm. Okay. All right. So earlier you were talking about insurance is kind of like more than what your parents may have told you. So working with your clients or just hearing persons like on the road. What are some misconceptions that you have come across on insurance and that you have heard from again your clients or the general public?
Okay, yeah. There's a big one. Um, One, the first one that come to my mind is insurance is a scam.
Yeah.
That's like one of the biggest ones I hear. Okay,
Yes.
that's my biggest ones I hear. The other one would be, I think this one is very prominent, is insurance is only for when you die.
Mm.
Mm,
Okay, only when you die is when insurance is beneficial. Um, and this is coming from person's experience. Insurance don't pay. Um,
mm,
for the younger ones, it may be insurance expensive, and probably also insurance is not for young people.
mm,
Mm.
Yeah, I think those are the biggest ones for me. Yeah,
mhm.
but
Okay.
it's always good to hear, those misconceptions, because it
Mhm,
gives me an idea of, I've need to ask where that came from. Okay, so
mhm,
did it came from your parents, you from an experience, or it's just that you don't know? You just hearing it from off the street. Okay, so then that will I could then not counter it, but then I could kind of bring some light to what it actually is, you know?
Mhm.
Okay, I want
Mm.
to do one more, another segue. Um,
Okay.
we were supposed to have a poll,
Okay.
but on YouTube got some issues there. We'll try to sort it out for next time. So, in lieu of that, help me navigate this. I am a 18-year-old male, and I just saw my late uncle go through a issue with his speech disability. He's mute
Mm-hmm.
now, and he was a singer before. And he had insurance on his voice,
Mm-hmm.
but due to something going on with like how he actually got the mutism, and even that is the right word, but
Mm-hmm.
you know, bear with me.
Mm-hmm.
Um, Due to that, the insurance decided we're not going to pay, or he's still in legal battles to try and get them to pay. Now I'm
Mm-hmm.
looking at this insurance slip, and even though my aunt is telling me you should go, you're young, da da da, you got a good job, you could spare a
Mm-hmm.
couple $100 here or there. How would you walk me through regaining my faith in how the system works?
Mm-hmm. Okay. That's a battle axe question, boy. um. Okay. So I will first go back to the uncle.
Mm,
As an advisor, I got clarify and clear up there first before I move it forward, because that's a foothold. So I would ask the question to try to figure out, did your uncle read his contract? Because most of the time, when you have clients saying, the insurance and pay, the insurance and do this, the insurance do that, the insurance does not put anything on the contract that it does not honor. Everything is in the contract. So it means to me that we have become a society who we just take a document and then sign and press hard. We don't read through our contracts. So when something does happen, then we say, well, we blame it on the insurance, or we blame it on the advisor. But I said to say is that we need to really get to a point in life where we take control of our own finances. It's all well and good to have an advisor, but it's still your life. It's still your policy. You still have to sit down and go through it on your own. Everything is not the insurance too. There may be instances where the policy may have lapse that your uncle never knew about. You know, it may not have been the specific. So you say in terms of your voice, it may be by a specific thing that or event that because the insurance to activate that may not have happened, which was in the contract. So it's always the first thing to go and point fingers at the insurance company, but we never really sit down and say what did I do wrong, or did I honor my side of the contract that would have happened. So I always clarify first the experience
mm,
of my client first before I go into the new policy, or going into your own personal policy. And if I
mhm,
go into your own personal policy now, I really look at what's important to you. What is your need, right?
mhm,
I know at Sagicor we are really big on this thing. We don't sell policies, we sell solutions.
mhm,
So if you have a
mhm,
particular problem, if you see there's a financial risk, that and insurance is the only way to say, well, to protect that risk, then
mhm,
in my mind I bring you back to, is it prudent for you to have it in your financial portfolio? Go back to the same two words that I told you for insurance. What if?
what if?
What if
Mhm,
this particular things happen? Are you able to get back up on your feet? If you are able to get back on your feet, then praise God, hallelujah. You don't need insurance then. But if you know that it's going to affect you financially, and not just you but your family, then we can clearly see that is a problem, and insurance is the solution, right? So it's as simple as that for me. I think that's how I would approach it. All right,
Mm,
looking at the need, and then using the insurance as a solution to a particular problem. Right, to help secure your financial goals.
mhm,
Yeah.
mhm. Okay, good. All right. So, it's interesting that Darren brought up the whole scenario thing because we're now actually going into scenarios, and we have both created some personas.
Mm-hmm.
Um, so the question above it is going to be like, what type of insurance would you should these individuals get based on their scenario? So the
Mm-hmm.
first scenario is with a 16-year-old. So Ben finishes school at 16 with uh, with five CXCs and gets his first job at KM2, earning 1,200 per month. He does not rent since he lives with his parents. However, Ben spends approximately 50% um, of his income on car insurance, clothes, and entertainment. However, he has no saving strategy, no investments, or no insurance protection in place. So, how would you advise Ben? Oh, and you're muted.
Sorry, apologies. Um, I'm merely going off of just professional experience because advisor is much more than just the surface. You really gotta go deeper. But
Hmm.
off the top of my head, what was the gentleman's name again?
Ben.
Ben.
Mhm.
Ben does not need insurance right now.
Okay. Okay.
Ben needs to first look at building an emergency fund.
Okay, I like that.
Insurance is important, yes, but there's you can, but it also requires consistency.
Yeah.
So I, as an advisor, would really want you to have a consistency in your savings and emergency funds first before you can commit to insurance policy. It does
Mm,
not mean insurance is not important. It does not mean that you shouldn't get it. But when you now start working, I always tell my young people the first thing you should do is look at forming an emergency fund first. That's the first thing you should do. It's then out of that savings habit and emergency funds that you can then start to fund your insurance.
mm.
I guess this
Okay.
don't really tell you how that would look. But to answer the
Mm.
question, Ben don't need insurance. Ben need emergency
Okay.
fund.
Okay. Okay. Cool. All right. So how much should he save up like towards 1,000, or what figure should he save?
Very relative. Remember, everybody's
Mm.
budget is different to
Okay.
based on everything. So, um, one person could save 200, the next person could save five because
Mm.
somebody living at home, somebody renting. So,
Mm-hmm.
your savings really depends on your circumstance, where you're going, your budget, your expenses, your lifestyle.
Mm-hmm.
So, I can never sit down and say that a person should save this amount of money. I really can't.
Mm.
Off the top of my head.
Okay. Fair
Yeah,
enough.
it's really knowing your
Mm-hmm.
client to then be able to get advice.
Okay.
Mm-hmm.
Fair enough.
One more
Okay.
question. So
Mm-hmm.
is it like a ratio thing? Because I heard, and this was like years ago, where it was supposed to be like 6 months of your
Okay.
expenses or something like it. So is it
Okay.
like that, or you know?
You mean in terms of emergency?
Yeah. Because that initial thing was very daunting to me. So here you're saying 2 and 5 was a lot more like, okay, maybe we can actually get this done. But like 6 months of expenses is like any thousands, you know?
Okay. So the rule of thumb, right, or
Mhm.
theory, is to have at least 6 months worth worth of income, right?
Mhm.
But let me be real. That's not realistic right now for young people in this time. So I
Yeah.
would usually say, me, my opinion, at least 3 months, at the very minimum, three
Mm.
months.
Mm,
Mhm.
Because if you lose your job, month one, you can be hurting, you can be in feelings, you can be
Mhm.
angry, you can be this, you can be frustrated, you're not gonna think. Give yourself month one to figure it out. Month two is where you try to get yourself together, getting applications out there, and then usually by month three you will get a response. So
Mhm.
I use that to my mind to say, well, hey, give yourself at least 3 months worth of expenses. If you bring it into perspective, if you are putting $100 to your expenses to your emergency fund every month, and your monthly expenses is $1,000, it means it takes you 10 months to secure 1 month's worth of living.
Mhm.
If you put that into perspective, you gotta take 10 months to secure 1 month. If you put in $100 and your expenses is 1,000 a month, it it then triggers in your mind, yo, I got ready, secure this emergency fund as soon as possible. I need to pay more attention to this.
Mhm.
Um, so that's why I always say start to secure emergency fund first and then go from there.
mm,
Okay. Yes, please.
mhm. That's true. And thanks for that question, Darren, because I was like thinking that too as well. Because it's like other advisors, financial advisors, I would like tell you indeed the a rule of thumb. And so I'm glad that you had given us a realistic oh, point of view of it. All right. So our guest has suddenly vanished. So we'll just
Connection issues.
yeah, probably so. Yeah.
Probably be
So we'll
back
just
up. Okay. Do you have? Can you message him and see what's going on? Just in case
yeah,
it's had like a hiccup.
yeah, probably is.
Yeah.
I'll give him like a couple of seconds.
But
S-
I guess in the meantime,
uh-huh.
like I like that he's like I was really impressed with the different answers he was giving because it's not like when he was doing the game. I wanted to say
Mhm.
this ever since when he was doing the game. A lot of the questions I was like, man, all of them is like yeses. But then he was like, I disagree. It was like, wait. And then like all the perspectives were like really nuanced. So I like that a lot.
Yeah.
He's back.
Mhm.
Yes, please. Yeah, sorry, I think I got cut off.
Oh, okay.
Mm-hmm.
Nice.
Mm-hmm.
Mhm.
Yep.
Okay. Right. Yeah. Right. So I was there saying and that I like how you took it a next further. Yeah, I took it further where it wasn't just about the a rule of thumb,
Mm-hmm.
but
Mm-hmm.
it's more so about more a realistic approach to the whole,
Realistic approach.
um, yes, emergency kind of like fund. Because again, like yeah, yeah, the 3 months indeed sounds like more easier to work with because it's like when you think of like 6 months, it's like oh my goodness,
Yeah,
you
yeah, I understand. It's already made things attainable, but
know.
also for your clients to make it, what's the word? Um, applicable in their minds.
Mm-hmm.
So if I come to you with all the jargons and you gotta do 6 months and da 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 da, if it don't make it real for you, then you gonna never really want to approach it, right?
That's true.
So for me, it's to make it approachable, for them.
Mm-hmm.
I do have one more question. Have you ever worked
Mm-hmm.
with a client like you said like I think it was it Bob? I can't remember his name. The guy
Ben.
friend
Ben.
Ben, right? It's um have you ever worked with someone who is clearly not ready for insurance yet,
All
but
the
with
time.
some savings and with some a little bit tweaking and stuff, they'll get to the point where they have that 3 month down, and they
Mm-hmm.
might then be able to put a little bit into insurance and then still build it 3 months, maybe to get to the six eventually.
Mm-hmm. All the time, all the time, all the time, all the time.
Okay.
I think that's where now we are, especially at Sagicor, we are not insurance reps. That was a term back then, insurance
Mm,
representative, insurance reps. But the term now is really insurance advisor, right? And
Mm,
that's someone who is supposed to carry you along a financial journey. It's not to sell a policy, but to carry you along this journey so that when they can see clearly that you can't afford insurance, I can still
mhm,
keep in contact with you so that when the time come, you can then come. But along the way, you can still have access to me so that when you have questions, if I could give you advice on how to make things better, the do's and don'ts. I mean, I can't really tell you what to do, but I could give advice.
mhm,
So we do see a lot of persons who may not be able to afford insurance or may not have the capacity, I should say. Yes, insurance is important, but there's a way on how to do things, right? And it's important to build a good foundation first before you start building,
mm,
right? And if the
mhm.
insurance is not, it is part of that foundation, but if I go dig the hole first and the insurance is not digging the hole, then insurance will come after. My job is to make sure you reach your financial goals, and I have to do that ethically, but also for myself in an integral way. So I ain't gonna tell you come and get insurance when you already know. When I know for myself, I know you can't afford it.
Mhm.
I actually want to see your success. So I ain't gonna lead you wrong.
okay. Okay.
Um,
Mhm.
and like how much clients a typical insurance agent would take on?
What do you mean by clients?
Well, sorry, a advisor, insurance advisor, because I'm thinking about this journey, and I know
Mm-hmm,
this could usually take like years and stuff,
mm-hmm,
and I'm trying to like picture in my head, like not just for the one person to person, but for like the many, because it's basically men into one relationship. Like, I'm trying to
mm-hmm,
picture in my head how the advising amongst those multiple journeys go, and how
mm-hmm,
much contact
mm-hmm.
is present in one average journey. Like, how does that shape? How does it go?
Well, an insurance advisor could have many clients. So it really brings to light how, I won't say difficult, how challenging our jobs could be. Because we have many different clients, and some may be calling you every day, some may be calling you twice a month. It really depends on the relationship you have, okay,
Mm-hmm.
and the system that you may have as well too as an advisor. So you may just tell your clients, well, every client I may at least reach out with them every 3 months. You don't necessarily need to hear them every day or every month unless it's something urgent. Okay, but I guess it's the consistent contact, at least once a year. I
Mm-hmm.
think at the very minimum, at least once a year. But it's also to be accessible to your clients as well too. So when something does happen, they can reach you. I think for me, the other side of it to me is the reason why I do. I post my newsletters, financial newsletters,
Mm-hmm.
or on my Instagram.
Mm-hmm.
That way, I can still facilitate financial advice for my clients outside of me having to call them.
Oh,
Okay. Yeah, yeah, yeah. So they're still learning while without having to call me or have that constant back and forth connection. So it really comes down to how you want to manage your portfolio.
okay. And at what point? Because I had gotten a call years ago, and my first question was, "Is this free?" So
You mean the
I guess,
advice?
yeah, basically the advice, because I can imagine obviously the policy isn't right,
Mm-hmm.
but like
Mm-hmm.
everything leading up to the policy, I found it really hard to believe that I would get someone that is financially literate and financially savvy, and has this job and is advising me through this, and then I
Mm-hmm.
don't have to pay them, and like Like, walk me through that. Like, how, like, is that, like, do you get that question a lot? I say that.
Not really. I don't really get that question. I guess it is implied sometimes that, you know, this is my career. I work for the company, so the company will deal with how I get paid.
Mm-hmm,
But for me interacting with you, if I think if it's a cost, I gotta tell you upfront it's a cost.
mm-hmm,
So that's why insurance is sold and not necessarily bought. So what
mm-hmm,
I mean by that is advisors go out there to sell insurance because persons don't necessarily think, hey, let me get insurance unless you want it.
mm-hmm,
So if it was bought, then you would know that is a cost to it. You will go there for the advisor pay, da
mm-hmm,
da 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 da. But because it's sold, people already know it's not something that I need to pay an advisor for.
mm-hmm.
So there's no worry to the client, and for you, there's no worry for you as well too because you can choose any advisor you want. So you can sit down and have an hour conversation, learn something for that advisor. But you have to, at the end of the day, you have to still come back to the trust of that advisor. Okay,
Mm-hmm.
so I don't have a collar around anybody. I don't own anybody. So if you decide to go with me as your advisor, then fine. But if not, then there's so many different advisors out there as well too. So I don't get my clients. I don't tell my clients are people that I meet. I don't lock them in. You know,
Right, right.
so you have the freedom to choose. But if you are comfortable with me advising you, you trust what I've said so far, and there's a connection or a rapport, then by all means, let me go on the road.
Okay, interesting. In that light, then,
Hmm.
in your experience, what would you say is the biggest barrier? Because when I was speaking to people, based on
Hmm.
their interactions out there, because again, like what you said before, one of the biggest things always is that it's too expensive,
Hmm.
and that, based on my understanding of how helpful it would be to have someone being like,
Hmm.
maybe you shouldn't spend $300 on food every two weeks. Um,
Hmm.
is like, I know this is like gonna be really thing. Obviously, like the $100 or whatever, but if I have the money for it, I am also able to better utilize the other
Hmm.
bits of money. In my head, the cost balance out. But everyone that I've spoken to has that, like, almost innate fear of like, this is gonna be too expensive and da 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 da. And most of the other people I do know that did went and get it, they do end up, well, that's a completely different story. But yeah, how, I guess what I'm trying to figure out is like, people have their misconceptions about the expensive part, because I don't think all
Right.
policies are expensive as people make them out to be. But then on the other side of things, it seems as though the people that do just jump into it
Hmm.
might not be jumping into it by like, let me listen to my advisor. They might just be like, oh well, I got X amount of money, I could put down $200 a week, even though they don't have like the
Hmm.
discipline there yet. So
Hmm.
yeah.
Okay, so to answer, I can't remember which one was the first question up, but I can just answer. The idea of insurance being expensive, I've come to. I don't know if you guys pick up on my personality yet, but I've come to the point where persons spend the money on what they care about. So if it's something that you don't necessarily care about, then you're not gonna really spend your money on it. Okay. Expensive is relative to a lot of persons. $100 may be expensive. 200 may be that's too much on my budget, but that will break my back. Right. So
Yeah.
at the end of the day, if it's not important to you, this is not going to be a cost attached. But if it is, trust and believe you will find the money. You will find the money to attach onto it. Okay. So whether it be, I guess we in the crocodile season and everything, and persons love crocodile and they will spend a good band on crossover. And
Mhm.
that's all well and good. If it's
Hmm.
important to you, you will find the money. The other thing too is that we have this constant misconception of what insurance is, and the, the idea of how it actually helps the portfolio. I think that's what a lot of advisors miss when talking to clients, actually showing them the benefit of how insurance fits into the portfolio. We see insurance as like a policy by itself, as opposed to a whole thing within the whole financial plan. So then it doesn't seem like something that's actually important to me. But if I tell you that your insurance protects your family, your savings, your health, if it protects your retirement, it protects legacy, it protects all these different things, it even protects your investment. If I look at insurance as a holistic within the financial plan, now it becomes more real, now it becomes more relevant to me, as opposed to just seeing it as a policy of itself,
Mhm.
as a blanket something on its own. It's something within the holistic side of it. So I think the how insurance comes over by the advisor is also um, important, because if you sit them with one advisor, then you're gonna have a perception that every advisor is the same person, or bring the same thing, right? So then going and hearing another advisor, no, you ain't gonna want to hear that person, right? So is a tough job.
I can only imagine. But tell me more about this portfolio, because when you have a rep mentioned a couple minutes ago, I had actually thought you meant your
Mhm.
portfolio, like your portfolio of
Mm,
clients. But it sounds like if
mm,
you mean the client's portfolio of investments, so
mm,
is that like so there's the insurance policies, there's like maybe
mm,
something to do with their business, and then maybe
mhm.
like actual like stocks and that kind of stuff, or like how was in the typical portfolio.
Okay, so when I say portfolio, I may be going too much into the academic side. I just basically mean financial plan. Okay, so insurance fitting into your financial plan is going back to the security of the different things in your plan. So I give an example. Your income is one of the most important things to reach your financial goals. And in order to earn an income, you gotta be healthy. But if you get sick or you get a critical illness, the question is, are you still able to earn? So that's within your financial plan, your income. So insurance protects the income capacity to earn. Let's go back to let's say in a family. If I am the main breadwinner, what happens at death is a lot of things can happen at death. But the main thing is loss of income immediately. When someone dies, that income is lost immediately. The question that I have to ask as an advisor is, how do I replace that income immediately? So I'm talking about the financial plan holistically, as in what is in your financial plan. It may be family, it may be health, it may be savings, maybe retirement, investments, everything within our financial plan or portfolio. Insurance is what we will call the denominator of everything. Okay, so on top of your savings, the insurance is a safety net. On top of your family, insurance is the safety net. On top of your health, insurance is the safety net. Income, safety net. Generational wealth, safety net. So insurance really is the bridge or the safety net of every almost every aspect of your financial portfolio or your financial plan. Portfolio is just the academic word. My apologies. Yeah, so I hope you understand what I mean by it being holistic.
So it sounds like I mean you said it perfectly. It basically underpins everything. So it's almost
Basically,
like
yes.
it's the fail safe in case any of the dominoes get let down. Basically,
Correct.
um, I had a question. It just left me. Sorry, I'm a
Mm.
that Daniel take it because like
Yeah,
nah.
when you're ready. Yeah, yeah,
Yeah, sure. No, I'm loving everything that you guys are honestly saying. Darren, this has been the most that you've spoken. So,
yeah.
um, yeah, I'm glad for that. Yeah, so I kind of just love how you brought up the other securities. So before we even get back into these scenarios, I just want to touch on this
Mm-hmm.
other question
Mm-hmm.
that we've had for further down, but I'm going to use it right now. So, right. So, if a joblessness were to occur, what
Mm-hmm.
other securities would should people have in place?
Okay. The people say the fact of the matter,
Hmm.
the truth of the matter really is, if unemployment occurs, if it's other than insurance, you should really rely on or have emergency savings.
Hmm.
That's the truth of the matter. So going back to even what we said earlier, it now comes back to why emergency savings is so important. I think in investment academics we call that liquidity.
Hmm. Yeah.
How fast they can have access to cash. Okay, and when it comes to recovering from unemployment, if an insurance is not in place for whatever particular reason, um, having access to money is the savings that are really accessible cash. Because within the insurance, it might be a case where the money may be tied up, it may be at a bank, if the policy is assigned. So you want accessible cash when it comes to unemployment, and you want it fast. Okay, so that's where the importance now of the emergency savings comes into play. And when I say emergency savings is one thing, emergency money is something totally different. Don't
Hmm.
put your emergency money in your savings account. It's
Hmm.
two separate accounts.
Yeah.
Because when you go down to the store and you got everything on one account, you swiping away you emerge. So you have to be able to differentiate what is emergency and what is savings.
That's true.
I will put a nugget here. It is out of the savings that you then get an insurance policy and invest. You invest out of the savings and so you get insurance policy and invest out of savings, because savings is surplus. Surplus basically meaning extra money that I don't need for survival. So I can invest and get insurance out of that money. But everything else, when I say emergency money, I mean put one side that you don't touch, the non-touch money,
Hmm.
right? I got a colleague that says she don't touch. She double don't touch it. That's what it is. Um, so now when I talk with clients, I really made that a focal point, um, to start building emergency funds. We are in a very volatile society right now and economic structure. We went through COVID. I think we generation went through the whole thing. Went through war, COVID, ashfall. I don't even know what else we can go through. But because we have gone through that, I think it's important that we don't forget it. We don't forget how important it is. All right. And however you need to structure your portfolio, if you need to put $50 a month, if you need to put 25 cents, is a start. Is already a habit that you have to get into. And because we're not habitual in it, we don't do it. But now it is important. Now we've seen the effects of not having emergency fund or accessible cash. I think is a pivotal part of building a good, strong portfolio or financial plan.
Hmm. That's true.
Mm-hmm.
One other thing that I want to also suggest, I heard this on a YouTube video once,
Mm-hmm.
but making use of your checkings account as well. So like for example, your rent money, everything, or every expense and that you would need for the month, put it in your
Mm-hmm.
like checkings account, and leave your like savings and the and your like expenses separately. So that is also like another thing that I've heard, and that sounds really
Mm-hmm.
nice as well. So yeah, I utilize your checkings
Yeah.
account.
So I got another
Whether
question.
it be a check-ins or a savings, the point is just have it separated.
Yeah,
That's the whole point. Just have it separate. Mhm.
yeah, it's
So
true.
we're talking about separate, and I don't know how much more separate it can be than on
Mhm.
accounts entirely. And I remember as a kid, we had I can't remember the conversation. I just remember coming
Mhm.
away with it being like, I'm gonna get like 5 different bank accounts.
Okay.
And everyone around me being like, you're not gonna make enough money to make that make sense, don't do it.
Mhm. Okay.
I never really understood why there was that much, because it was a very acute response. It wasn't nah, it
Mhm.
was like, like people get like really passionate about stuff. So what
Okay.
is your opinion about having multiple bank accounts? And if the is there like a particular number you should have, or is there a point where it becomes, let me say, a hindrance?
Okay. Um, what I would say is multiple bank accounts is something that we're seeing a lot in this time, and I
Yeah.
don't knock it. I guess I will share these nuggets. Multiple bank accounts give you access to different banking systems, banking policies, banking promotions. So it's being flexible within our banking structure right now. So I'll give you an example. We have credit unions now are more on promotions than banks do. So
Mhm.
if I'm not, let me say a part of, I won't call the names, but let me say a part of a particular credit union and they're doing a promotion, then if I'm not part of that bank, then I can't have access to that particular promotion. So multiple bank accounts doesn't necessarily mean that you got a lot of money, but it just means too that you can have access to that banking structure or banking promotion that they may be known for. So there's a particular bank in Barbados that are known for their credit cards. They have good credit cards and they have good cash back or whatever. Then why not have access? Why not have a membership then? You until you got $5,000 or 500,000 on the account, but
Mhm.
having access there to the credit cards that when you may need it, that's important. Accessibility right now is very important. So I would say multiple bank accounts is not a bad thing. You will more find women. Women have 6 and 7 cards, and I always wonder why. But I understand having access is very important in this time, right?
Mhm.
So especially if you're looking for a mortgage, it's all well and good to look around. Somebody maybe 4% over here, 3 point something% over here. So having access to the banking sector is to me is a good move. At any point in time, you could close the account. Once it doesn't cost you, I don't see anything wrong with it.
Okay. Um. So okay? So are we saying that there's no large drawbacks besides? Because I think it's RB, not to call the names, but my
Go
bad.
ahead, go ahead, go ahead, go ahead, go
There's
ahead.
one that I think it's like either it sounds small, like a $5 a month kind of thing. But
Mm-hmm,
I
mm-hmm,
personally remember being very put off, to say kindly, by the policy.
mm-hmm,
Um, so one,
mm-hmm.
is it like that like a lot of them, or is that like the only real caution? Are there other cautions besides that?
Okay, so I guess the cautions will come into play in terms of what type of account you choose, because
Right.
there are accounts that will have a charge to it, right?
Mhm.
So again, going into what I always tell my clients, it is you out there. If you don't have me, you're out there on your own. You have to take precedence and importance when you're going into your bank. You got to ask questions. You can't just be like, it is what it is. So find out what you're doing. Find out what type of account it is. Find out the drawbacs. It is
Right.
your bank account. You need to know about it. So some bank accounts may have charges. The other drawback maybe because you have so much transactions happening,
Mhm.
you may be more prone to someone probably cyber attacking you
Mhm.
because you got a lot of things happening, especially if you're doing it online, right? So that's just an example, right? it still goes back to the bank's safety features. But if you got many bank accounts and you ain't really tracking all of them, then somebody can say, well, hey, he ain't tracking number two, so I can target number two. And when you check number two years later, you ain't you know what I mean? Number two gone.
Girl, no, what's happened?
So as much as you can handle, take. But if you
Mhm,
know that you as a person that you ain't tracking accounts and you checking back at them every 5 years, then don't be that person, right? The
mhm,
other thing too would be, this is a more of a far fetched one, but it goes back to the same compliance in that
mhm,
this is the truth. The the banks know what other banks you have.
mhm.
Everything is like connected.
Right.
So when certain transactions are done, there's the compliance side of it where if it's fishy, they may flag it. Okay.
Mhm.
So it just means that don't over exaggerate the amount of bank accounts that you may have just
Right.
because you can, right?
Right. Mhm.
So yeah, there's minor cons, but more advantage in this time than cons, I would say.
Okay, that's exactly what I want to go into because what I felt like I remember hearing something along, and this is when there was like, oh, you shouldn't do that. Something
Mm-hmm.
where like, if you have too much bank accounts, let me say more than five or something like that
Mm-hmm.
if you don't have like a certain amount of money, or if you don't keep the account decent or whatever, that
Mm-hmm.
your credit score, because apparently we do have one of those in Barbados, will dip because of it. And I always find that strange because it was like, as long as I ain't not like borrowing money and not paying it back, I should be fine. But they were
Mm-hmm.
like, it's almost like they were trying to convince me that like if you have like a low amount of money in your account for like too long, that's gonna somehow like
Mm-hmm.
come back on you. So it sounds like if that's a no.
The what I would say, because I don't work in the bank now, but what I would say, if the bank's policy says that you have a minimum balance to the account, then I don't see why it should come back years later and tell me anything about that policy.
Right,
If you
right.
tell me $200 is the minimum balance and they keep it at $200, then by all means honor it. Keep the account open, right? So
Mm,
yeah. Hmm.
yeah. All right, good. So, question that I was gonna ask before, but forgot.
Okay.
Um, so basically, you have this client, and
Hmm.
they, finally get their stuff together. They get a policy with you.
Hmm.
How far do you carry the advice? Because I'm curious about if you are able to get an insurance advisor or financial advisor that will be able to like yes get you like the insurance policies and stuff, but then also be able to help you like be like um okay, now you might have like the funds to invest, not necessarily saying that like they're going to be like, oh, you should invest in cryptocurrency and Tesla, but being like,
Hmm.
yes, you have funds, you could probably put this amount to investments. Do you want
Hmm.
not to like do crazy on like NFTs or whatever, but like
Hmm.
you have the ability of doing this, are
Hmm.
giving you just sound plays in like the financial world?
Hmm.
Is that
Okay.
something that
So
is in the realm of your, you know?
yeah. So
Mm,
we are seeing now, and this is a very big thing in the insurance industry, is continuous education.
mm,
Continuous education. So it's not it's really moving away from the insurance rep to the insurance advisor,
mm,
and then to the realm of financial advisor now, where it is
mm,
beyond just insurance, but is holistically, to whether it be investments, whether it just be if they're going to buy a car, what type of car, what insurance, how I should go about it, the processes of how to go about it. Mortgage planning is a big thing. It's just not going to get a mortgage, but it's the planning behind the mortgage.
right.
And then because we as advisors may understand what may be ahead of you because we have gone there before.
Mhm,
Give an example. So in mortgage planning, people always think it's just the mortgage, but you still got to think about the property insurance. You got to think about the down payment. You got to think about how to go about this. So you will find your clients calling you and asking you questions about just sometimes the most, I won't say basic, but
mhm,
the most basic things that that they didn't, because if you don't know, you don't know. I can't fault you for not knowing. The purpose that I'm here for is to show you and to teach you and to guide you. So why not have access to me? So yes, we're going beyond the realm of just insurance, also into investments. And I guess Daniel would know, but doing my master's in finance and investment management, I think that was the direction that I was going in terms of, yes, I'm an insurance advisor, but I want to provide a bigger service for my clients. So you can ask me anything about investments. I would
Mhm.
give a I would give a advice, but I won't give a recommendation.
Mhm.
It's two different things.
Yeah.
I ain't gonna tell you what to do, but I will tell you, I will guide you in a particular direction. So yeah, we are growing in terms of the insurance industry of beyond just insurance.
Mhm. Okay.
Okay. Okay. All right. So that's good. All questions
Yes.
are out from you.
Are
Okay.
we going back
Good.
to scenarios or?
Yeah, we can go back to the scenarios. I know that there was one that you had kind of like question, a bit of a question on. So we can give that scenario, and then I'll just let you. Um, I'll let you answer question afterwards. Right. So the this scenario is on Gregory. So Gregory
Gregory.
is 60. Yeah,
Mm,
Gregory. Yeah. So Gregory is 62 and works as a supervisor at a supermarket, earning
Mm-hmm.
mm,
$3,800.
Mm-hmm.
He just bought
Mm-hmm.
a new car for
Right.
$80,000
Eighty
with
thousand.
yeah, yeah, with 5 years left until a retirement. He has 500 no a $5,000 in savings. He has NIS but no life insurance. He is divorced with eight young ad- wait sorry with eight adult children. Out of the eight children, six are irresponsible with money.
All right.
So that
I just put out all the notes one time. 80,000, 60 years, supervisor, 5,000 in savings, NIS, divorce, eight children, and six of them irresponsible. I miss anything?
no
5 years left on the mortgage. 5 years left on the
uh-huh.
on the
um
on the car.
on, yeah no on the a retirement. So like a
Five
5 years
years
and
left.
like so
Oh,
a
5 years to retirement.
retirement, yeah. Yeah, so
All
a
right.
lot is happening.
Yeah, 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 yeah. Um, sometimes as advisors, a client may come to you in frantic, and you may not have the ability to flesh out things. So you just got hit the points to be able to analyze and say, all right, okay, okay, so 5 years left to retirement is a critical factor, right? That's critical. Um, eight children is interesting, and then six of them irresponsible. I think I would go first and look at, before I look at anything else, I would look at why the children are irresponsible. What was the dynamic there, right? So remember, insurance is just not about yourself, right? But it's to do with family as well too. So understanding why there's a irresponsibility there. Retirement being a big factor, I will have to ask other questions in terms of, you know, what else besides the 5,000 in savings? The NAS is there. What's the contribution there? What would that look like?
mhm,
What is Gregory's average expenses? Because
Mhm,
on paper or face value, it may seem as Gregory is not in a good position, but Gregory may have house paid off, just enough money. He might
mhm,
not be a person that may spend a lot, so he may not really want to have a big retirement savings. That said, it doesn't mean that that let's say for example you only get in $2,000 for NAS. Remember that years from now, the value of your money will change. So is looking at how do you maximize the pensionable income. The other side of it is as an advisor, you have to is telling your clients the the professional blunt truth, right?
Mhm.
And that sometimes is the most difficult thing because obviously the person want hear what you gotta say. They may want hear this advice, they want do as a like, and they want you to work within that. But the truth of the matter is that the vehicle don't need to be 80,000.
Mhm.
So sometimes you got already dial back clients in terms of where they're going and to as young people say, make it make sense.
Mhm.
Make it make sense for the client. At the end of the day is what's important to him. So if retirement is important to you, then by all means, I think you would do accordingly to what is important. The children is also important because even though there's six out of the eight, it means that two are responsible.
Mhm.
So if Gregory cares about his family, and then Gregory would probably look at a whole life policy for the
Mhm.
two children, which are the responsible ones that in event of death, that the family is not necessarily in financial turmoil. And they also look at the perspective of the six out of the irresponsible. I do not know their ages. So obviously a 10-year-old would be irresponsible. Right? So it does not mean that the irresponsible ones will always be irresponsible.
Mhm.
Yeah, that
So
is a good
for Gregory, leaving something in terms of generational wealth or security in event of if he passes away, then the family is still not affected. The $80,000 car, if there's no money, then it gotta be sold for the family to continue to, right. And then also Gregory may also have assets as well. So these assets may need to be passed on to the same six children or the two, I should say.
Mhm.
And insurance is one of these cheap, most I won't say cheap, most inexpensive ways and safe ways to transfer wealth.
Mhm.
Okay,
one.
to transfer wealth. Okay, so it's done inexpensive and it's done in a safe way. So depending on what assets Gregory may have still standing, it will be prudent to have probably a whole life policy to protect the family first, and then you can look at that planning for retirement, right? But retirement is very big, okay?
Mhm.
And I say that to say because retirement and pension is two different things.
Mm. Okay.
Pension is what you get at 67, the government.
Mhm.
Retirement is when you want done work. You
Mhm.
could done work at any time you want,
Yeah.
but you can get a pension for sure at 67 or 70. For him, it'll be 67. For us, it may be 70. Okay. So now when I tell you that retirement is where you want done work, the perspective now changes in terms of your financial goals.
Mhm.
Because you are seeing persons now working past 67, still at 70 and still working. Right?
Mhm.
So it is really having the background of perspective and sharing that with clients that then changes their idea or reality of what things actually are. Right. So that's how I would approach Gregory.
Um, One small follow-up question.
Mm-hmm.
So
Mm-hmm.
for Gregory, if you were to go to the banks with trying to get the auto loan,
Right.
do you think it would be harder for him since the retirement is coming up soon? Or, yeah, that's a question.
Okay. Yes. Remember that the banks are your friend, but still not your friend.
Mhm.
The older you get, the less and less the bank is going to loan to you, because what the bank really cares about is your capacity to pay back.
Mhm.
As you get older, there's a higher risk, okay, and a shorter time period for them. So for a person at 62 going for $80,000 loan to get a vehicle, the bank gonna probably give you high interest rates, or they gonna probably hold something as collateral. Okay, so this is why we are seeing now persons utilizing an insurance policy as a long-term loan capacity. So within your insurance policy, there's a cash value buildup, and this cash value you can borrow from this cash value. So rather than borrowing from the bank, you can actually use or position your insurance policy as a long-term banking system if you want. Okay. Remember, I told you insurance is holistic. So instead of borrowing from the bank, you can actually borrow from your insurance policy and have the capacity to put it back. The difference between borrowing from the bank and your insurance policy is the bank is going to give you a scheduled payback system. So they can tell you, all right, Darren, you got to pay back $300 every single month. The insurance policy is not going to tell you that. They can tell you that you got outstanding loan at this amount, and that's it. So the flexibility our insurance policy provides as it relates to loan capacity,
Mhm.
when it comes to long-term savings and retirement, it actually fits the portfolio very well. Okay. The other thing too is the bank, the, as I said, the bank gives you a fixed payback system, and the insurance gives you the flexibility. The other thing too is when you pay back the bank, you pay back the bank and done. There's no benefit to you after you pay back. When you pay back your insurance now, depending on the type of policy, you can add you cash accumulating vehicle. Okay, you're paying back into a cash accumulating vehicle, right? So the insurance now becomes not just one dimensional. It has a life insurance aspect, it has a cash accumulation, but it also has the loan capacity as well too. That in event of long term, many banks may not necessarily want you to borrow from them. It is there. The other thing too that we have to look at is 15 years from now, we do not know what our banking structure will be. So the requirements of the bank to get a loan may be different. The bank may tell you, Darren, you need to have 10,000 on your account to borrow to get some money. So that may be the requirement. I'm just saying that this is a possibility. With the insurance now, we do not have any requirements. So you see the difference there. So what the insurance does, it really positions you for down the road that when something does happen or the event that you need to borrow from the event of emergency that is there, you can actually build a loan capacity using your life insurance policy. So yeah, that's a little nugget there.
Is this
Okay.
that thing that was popping off? I think maybe like a little bit before COVID, where it was calling like infinite banking or something like that.
Yeah, uh-huh. Yeah. Yeah,
No,
it was.
not for
But
insurance.
oh, okay.
Oh,
Oh,
okay.
okay.
Mhm.
Yeah, I saw that.
Um,
I wanted to see.
I will
Okay.
have to look into it.
Hmm.
okay,
Okay.
no problem. All right, so
Mm-hmm. Yeah, we lock in.
there's
Mm-hmm.
there's is how which policies or which types of policies would that but borrow and payback thing work with? And part two
Mm-hmm.
is say because I'm like 28 right now, right? I
Mm-hmm. Mm-hmm.
still have a little bit of odds and ends to tie up to actually finish to get into the career that I actually want.
Right.
And
Okay.
I am a little bit hesitant, thinking maybe, well, hesitant. I'm worried, thinking
Mm-hmm.
if I don't get this tied down soon, then I might get, say,
Mm-hmm.
late 30s, early 40s, and 40 plus 3 is 7. And a boy don't want to be like giving a loan to a 70-year-old or having somebody still trying to pay things off when them is 70. So that would
Mm-hmm.
probably be a rough cutoff time to like getting a good mortgage deal. So would
Okay.
this insurance be would this type of policy be a way of either A, making in banks a little bit more pliable, or B, actually financing getting a house on my own?
Okay. Um, so the first question you were asked is the type of policies. So you will more find whole life policies and endowment policies providing the cash accumulation necessary for the long term borrowing aspect. As it pertains to the mortgage, the insurance does not initially qualify you for the mortgage. It is your capacity to earn, so it comes from your income and your debts. What the insurance does, it forms the collateral for the bank. So scenario in the bank's mind, the banks is saying, well, all right, we can give you whatever age, we're gonna give you say $300,000. They are banking on your capacity to pay back because you are working. If you
Yeah.
pass away, remember we said that death takes away income instantly. So in the bank's
Mhm,
mind, the bank is asking, well, if you pass away, then how are we going to get back our money?
mhm,
So the insurance forms the collateral, which is the protection for the bank.
mhm,
So your ability to get the loan is not the insurance first. It is really how the bank looks at your income versus your debt. And if your debt outweighs your ability to your income, then by chances are you may not qualify. So you
mhm,
qualify first by income and how you manage your debt and your budget. Then
mhm,
the insurance then forms the requirement of securing the loan for the bank, and not just for the bank, but also family as well too, right? Because it's all well and good to own a house, but it's the maintenance of the house and the loss of income of that household
mhm.
that you have to take into account as well too.
Mhm.
So would you say that if you're looking to get a house in the future, say like for me,
Mm-hmm.
I started my career at, um, even though you are earning a little bit and it might not be what you want to do for your career, it would still be a good idea
Mm-hmm.
to get some type of insurance plan. And another part B, are you able
Mm-hmm.
to start with like a lower level plan and then like, you know, evolve into something else? Or like, how does that work?
Evolve is a big word. Well, all right. Repeat the first question again.
Okay, so um I basically I'm trying to like
Mm-hmm.
put in my head if you are
I think I remember. I think I remember. If
yeah, I'm
you
sorry,
if
I'm
even
glad
though
you
you haven't,
said
yeah, even though you're young now and you haven't, you're looking for a house later on.
right.
If they get the insurance, if they look to see to secure insurance, no,
Mm,
yes. Remember I said initially, right? And everything I say is always connected, right? Initially I said insurance is bought on good health first.
mm, mm,
I've had instances where a client is looking for the plan, the goal is to get the house, the mortgage. They didn't want the insurance. No, a
wow.
year passed, and that particular person, they found out that they had cancer.
Wow.
Mm. Wow.
If your goal is to get a property and you are young, my advice will be to maximize your insurance protection now. Secure your insurance now, because your insurability is what is going to qualify. Because if you don't have the insurance, the bank can tell you, can ask you what else you can put forward. You got a car, you got a house, you got cash, you got a goal.
Mhm,
So if it's part of that requirement to reach the goal, secure the requirement now, because the requirement is not like it's always on the table.
Mm.
There's a possibility that could go. Okay.
Yeah.
And the other question is, if your insurance could evolve, then you understand what you mean? Yes. It's
Okay.
about building your insurance portfolio over time.
Mhm.
Mm,
Darren, you don't need to come into Sagicor or wherever else and get 10 policies one time. Right? You don't need to get
mm,
10 policies. I can't get 10 policies. You could I gotta get one policy every 10 years.
mm,
So it means that it's a consistent building of your insurance portfolio over time. Whether it be a new policy, I don't think we do upgrades anymore, but as you get one policy, you can always build on to another policy.
mm,
Mm.
Remember that your family structure is changing, your lifestyle is changing, your budget expenses are changing, your economic environment is changing, everything around you is changing. The question is, why is your insurance portfolio not changing with it? Why is the safety net, why is the security to your financial plan not changing along with your goals and everything else that's changing around it? So it's a consistent, building and improving of your insurance portfolio.
Mm. Okay. And when so let's say you so I'm guessing when you start off there's probably certain basics policies that you would like recommend for like say 20 like late 20s early 30s type individuals
Hmm.
like based on like where they are in their life.
Yeah, the recommendation will always be on the need.
mhm,
Okay.
It will always be based on the need. Yeah, and the goal. So there's nothing to say. Well, I guess there's a generically good policy, but a good policy may not necessarily fit what really happening in your life currently right
Right.
now. Right. So I'll give an example. Like, let me say there's a client that say that works in a high risk job that let me say in radiology,
Mm.
mm,
and they're prone to get something like cancer or anything like that. Then you may want a critical illness policy first before you get a life policy. You know what I'm saying? If you
Yeah.
could only afford $50 or whatever else, I would advise you to get that critical illness first, because you're more prone to that critical illness. And then we could probably see how we could fit in the life policy there too. I want, so it really comes down to the need, and also at the end of the day, it also comes down to the budget as well too.
Hmm.
Yeah.
Okay.
So it's not a one fit all thing. Yeah. So when I always tell clients, there will always be that friend that has a particular policy that is different to yours.
Mm.
Don't go comparing policies, because the reason why you get yours may not be the reason why they get theirs.
Right.
Right? Yeah.
Right.
yeah.
Danielle, what was the next one?
Right. So I think that we're going to move on now to the other kind of questions. Um, right. So since we're kind of like on the topic of culture, I want to
Culture.
and lifestyle. Yeah.
Hmm.
I want to go into that a little bit more. But before we get to that, I have a question. And this is
Okay.
not necessarily in relation to like insurance, but it's more so into banking. So I've
Okay.
kind of like heard and that whenever you want to like take out a loan or wanna from the
Hmm.
bank, that they have to like print the money. Is that true?
They have to print the money.
Yeah.
Okay. Not necessarily. So what
Okay.
I would say is, sometimes depending on how much money is on the account, it may not necessarily be at the bank per se on that particular day. So it's a digital number to reflect how much is there, but it may not be necessary at the bank. So then the bank would have to then order money probably from the central bank to be sent to thing. depending on the bank or how much it is, they may have access to it there and then. But in terms of printing, you
Mhm.
would know when there's printing of money. Yeah, you would know because then the printing of money, there's interest rates and everything that may that they
Yeah.
do say that it's going to change because of a new injection of cash into the
Mhm.
market. But generally in Barbados, the average person they don't print money for is there, but it may not be actually at the bank or maybe at central bank. They just have to order it. Yeah.
Okay. Okay. Gotcha. Okay.
Mhm.
Thank you for clearing that up. I've heard that once, like on a podcast. So I just like I wanted to know if that was
Mhm.
the case for Barbados or the
Mm-mm.
Caribbean, like or not. So thanks for
Mm-mm.
clearing
Printing money
that.
is crazy. I thought only governments did that.
Mhm. Yeah, only governments are allowed to print money.
Yeah.
Yeah, because printing of money is very dangerous.
Mm.
Mm-hmm.
Because it affects obviously the more money it is in the economy, um, the interest rates will then fluctuate a lot. When interest rate fluctuates, then
Yeah.
is a lot of things happening, you know. But
Yeah.
the government is who regulates, the central bank, let's just say, is who regulates how much. So you will find, I guess this is something that I will tell you guys. So you'll find that like in Christmas time, you will see more loans, Christmas
Mm-hmm.
loans, and
Yeah.
$25,000 line of credits, and then you tell yourself, how the banks selling out so much money? Like and like few requirements. Just bring a job slip and you know what I mean? Like so you ask yourself why is so much money
Harvey.
being loaned out? It's because the banks have too much money on them. They have too much money in things. So the central bank is saying,
Oh.
well, they need to get that money out so that it could fuel the economy to start moving things along,
Mm-hmm.
right? And when there's too much money out there now, they increase the interest rate so that there's less money, so they can regulate the economy back into a good thing. So it's really how to regulate the economy. Yeah.
Okay. Understood. Okay. All right. So we can go into this topic on or section on culture, right? So I think on Friday when we were kind of like talking, we had even like mentioned it earlier when you said and that people want to spend money on what they want
What do
essentially.
you want? Yeah.
Yeah.
Mm,
Um, and one of the things and that I've heard like from a financial advisor in Barbados, as she said, and one of the first things that people like usually get is a car, a for like anything else. They tend to like
mhm,
get um a car and whatnot.
mm.
Um, and so, what are other kind of like things and that you find people kind of like spend a lot of their like money on?
Money, or when you say things, you mean in general or financial
Yeah, yeah.
products?
In general, yeah, in general.
Mostly, yes, mostly vehicle. That's where mostly money goes. Other things may probably be like food, like grocery. We see a big chunk of money goes to groceries and living.
Yeah,
Um,
rent. Yeah, that's true.
this may sound strange, but this is one of the things that I mention to clients now is the miscellaneous, right? So, for example, pets.
Oh.
We
Yeah.
spend so much money on pets, but we don't necessarily think about it, right? So a lot of money goes down that direction. I guess another one would be I guess loans. We pay back a lot of loans, very high in loans. And the last one I would say would be let me say like subscriptions.
Mm, yeah,
Yeah,
for sure.
subscriptions.
Yeah, Netflix.
Yeah, they just add up. So
Yeah,
though it makes
that they do.
they add up,
Yeah, it's true.
because it's so minor to say, man, it's just $30, but then you're gonna get sign outs, and then all of a sudden at
Yeah.
the end of the day, you got $150 in subscriptions, and you don't even watch your thing every single day.
Hmm. Yeah, it's true. It's so true. And
Hmm.
also too, I find also to internet, like the phone packages, bills and whatnot. Sometimes I'm just amazed um by the vendors and like who are in tongue, right?
Hmm.
By and I like see like most persons like on their phone, and so then I'm there thinking, okay, they have like data, right, and whatnot, and I be like, I'm not sure like how much money they're making, right, but like to be able to afford that plus the other things and that like they may have is just kind of like wild, and it seems to me, and I'm like, oh wow. So
Well,
yeah, just being
depends on what
able to.
package you have.
So
Mm,
I know they just sell. Go ahead, Darren.
no, I was gonna say in vendors' defense because they also sell as well. um, Typically speaking, because it's like 100 a month,
mhm,
and that's like the cheapest one that I know. But I don't know what them be on if they're on something. But there's that. But there's also City Social too. So don't forget about that. It's
oh,
free.
oh,
It runs really crappy, but it's
Mm,
free. So in their defense, it is somewhat economical. And I do think there is something to say about like because like and this goes back to Asher's point because people spend on what like matters to them. And if you're sitting down there for like 8 plus hours, you know, mental health wise, it's good to have something to look at. Um but I also feel it does help with also making good use of the time because while you can also be on YouTube scrolling doing nonsense, you can also like be I don't know looking up something to help the business or being on social media to help the business stuff like that. So it's not like totally thing,
mm,
but another thought that came to mind while I was replying when we think about like pets, food, Netflix subscriptions,
mhm,
and what's the other one? A car. Isn't that
mhm,
like the four main things people like interact with in general? Because people have like hobbies and stuff like that we're not gonna mention, but that's like only like small groups of people. So I'm wondering like I don't know. My mind is going into like some sort of like trying to figure out if these things are kind of like almost like breadbasket concepts. You know, like how when things get hard in the economy, the government talks about like the breadbasket and making sure those grocery items are low.
mhm.
Is there a world where we can adjust these things to like properly fit the types of money that's coming in and making
Mm,
sure that that's not going like over and beyond
mhm.
like and still being able to like still being able to maybe eat out every once in a while but also doing it in a way that is like economical.
Yeah, yeah. So I would say that right now our budgets are the average budget. There are very few variable um, expenses. So you have fixed expenses on one side and then variable. A fixed expense obviously be a loan or what or things like that and bills. But variable you will find be like groceries or transportation if you take the vehicle the car what's not.
mhm.
Food is one of the most variable income expenses we have. But at the end of the day, how much less you want a man to eat? Like under bread, I don't see anything underneath bread. I don't see nothing underneath bread. So I guess that's why there was a big thing about food budgets and everything. And don't get me wrong, Bajans got a real champagne taste, you know. When once we start eating a certain lifestyle for a certain way, it's be very difficult to cut back, right?
Yeah.
Um, but we have lost some things in terms of how to do things like simple cooking, how to make meals, fun, different. So there are things like that I guess move into the other level of financial planning in terms of how you can navigate a person's lifestyle to fit a certain budget to at least create some what the minister will call fiscal space. You know, just a little bit to be able to not paycheck to paycheck, but at least a little bit of space that in event of emergency or you need opportunity to a little $20 here, then you have it. But I would
Mhm.
say it's becoming very, very difficult. The fiscal space within a budget is getting very, very tight
Yeah.
because things are increasing and income is not increasing, right? So the idea person always say, to cut back on things, and I might only cut back so much. So I think the level of thinking that we need to take our clients and even ourselves is stop trying to cut back and start to look how to make more. That's the other
Mhm.
side of it. That's the
Mhm.
other solution. If we can't cut back no more, I gotta look to see how I can make more. It's easy. I never say it's easy, but that's honestly the other side of it.
Yeah. Yeah. Um, I think, and this is just a point one I want to think, because when you was talking about like there nothing on the bread, and that entire point, like I think that speaks to like how you were saying, like, us losing the, let me say, traditions around like cooking and that kind of stuff. I
Mhm.
remember I was up by my aunt helping her to move in, and one of her neighbors was cooking, and I just remember gritting my teeth like a kid and remembering childhood. It just smelled
Mhm.
like, if you could picture stereotypical old Bajan meal, that
Mhm.
was the
Right.
exact same. I know we all remember that exact same, and I just remember
Mhm.
like I want
Mhm.
to learn to cook from that person, because you don't smell that anymore. Like, you might smell KFC by somebody, a Sunday.
Right.
You might smell like rice and peas, but you don't smell. I don't know what dish it is. I just know it had a meat. It was seasoned like
Mhm.
to perfection, and it had some good drum provisions in it. And I'm making that point because a couple of years ago, I wanted to learn to make doubles. There's some places
Yes.
like Lisa's doubles, got all over the place. So it gotta be decently well run business. You could get them for like, I think some of them locations you get them for as much as $3,
Mhm. Mhm.
and double it up, you get it for five. And if them selling it at that much, then it means to make it at home gonna be even less, because obviously then gotta pay employees.
Right. Yeah. Mhm.
These types of dishes was like all around Barbados. I didn't know, and I got like more even local to Barbados. So I'm wondering if like we're losing connection with like, people might call them struggle meals, but them taste good and them
Mhm.
fill the stomach. So I feel
Right.
like maybe us losing that cooking and going to Chefette and all that kind of ways, all that
Mhm.
type, could be feeding into this a little bit, you know?
Yeah. I think we've lost that connection to each other, and that at one point you used to cook for the family, you know. But now it's really I can cut for myself, So I think the collaborative effort in terms of saving money. I think now too, after COVID, persons are now going back home. They came back home looking to save money here. So there are ways, and I think we're slowly getting back there. But I think because we are kind of a we would call hard-headed society, it takes a lot for us to know that, all right, shoot, boy, I got really pack it in. I really got
Mm.
see how I could no make a difference. The one of the reasons why it's very difficult for us is because of one word: sacrifice. We don't like that word, you know. We don't like that pain of going back or thinking that we're going back, you know. Um, so we would try to do everything else but to sacrifice and to make a way. So I think that's what really is. But I'm seeing and I'm seeing more, persons coming to that realization that, I need to put my pride aside and I need to do some things that I may not necessarily be comfortable with to be able to get where I want to be, you know?
Right,
So
right.
yeah.
Yeah. Okay.
Um, for your successful clients in this space, do you see any particular? Because we're still taking with food for now, so it isn't most variable. Do you
Hmm.
see any particular movements in that variable that like I don't know what to say successful, I don't want to think, but the more adaptive clients that
Hmm.
anything that they particularly do that you would say more people should start doing.
Okay, so I seen a lot more clients. They're more interested in starting up their own garden.
Mm,
We're going back to the ground provision
mm,
age or era,
mm,
I should say. And I know many doctors will say, that these different starches and different this are not healthy. So because we're going back into this healthy lifestyle thing, yes, the things are expensive in the supermarket. Living healthy in Barbados is expensive. But if we take the time to go back to these type of gardenings and stuff, I see more people, I can't remember the name. There's the aquaponics. I've seen more people try to,
yeah.
save money there. So there little steps. I've seen people take to be able to cut down on their thing, and going back to the making meals fun again, because meals
Mhm,
could be the most expensive thing. Innovating your meal prep or your meal plan. I
mhm.
think that is what I'm seeing now.
Okay,
Okay. All right.
like
That's
that.
pretty good. Okay. All right. So we are going to stop here. It has been a little over 2 hours now. It doesn't feel like it. um, but there will definitely be a part two in the in the future. I'm not sure when, but in the future we will definitely have a part two. But before we
Mhm.
go, I just want to share Asher's Instagram with you guys. I have just placed it in the chat. So you guys can honestly go ahead and unfollow his Instagram. Is called Financial Pit Stop. So yes, and Asher, we thank you so much for coming on the podcast and talking
Yes.
about insurance with us. You really truly give us so much wisdom and so much
Mhm.
nuggets. So thank you so much.
You're most welcome. Thank you for having me, and I do look forward to the part two again.
Mm.
Merci. All right. So goodbye, everyone.
All right.
Right?
Mhm.
I don't have control over it this time. I don't
Give
think.
me a minute. Yeah, it's connecting back to the.
Yeah, I think you gotta stop it this time.
Yeah. I'm trying to. It just says connecting to the studio. Hold on. Let me try to refresh. I might leave.
Okay, seems like I have that dead. Okay,
Back. Let it stop.
life is gone. So
It's gone.
no, the viewer is gone. Um, but
Oh,
um,
for some. Okay,
stop there. We can edit this part out, but it's fine.
yeah.